Welcome to today's practical planning tip by ParkBridge Wealth Management. My name is Jonathan Shenkman, and I'm the President and Chief Investment Officer of the firm. Today, I'd like to start a new video series on how to manage a financial windfall. In the financial world, few things offer more comfort than receiving a large sum of cash. The challenge is how to handle a windfall responsibly based on the markets, the economic environment, and personal circumstances. In this video series, I'll offer a framework that may be helpful to ensure your large inflow of capital, irrespective of whether it's from the sale of a business, large gift, life insurance settlement, bonus, or inheritance, is being handled responsibly. And the first step is to pay off debt. An important first step after receiving a large windfall is to assess your overall finances. If you borrowed any money, you should consider paying that off first. It's very difficult to grow your wealth while you have an onerous level of debt weighing you down. Credit card debt, student loans, and auto loans are all bad and should be paid off as soon as possible. Conversely, a low rate fixed mortgage on your primary residence and some forms of business debt can be paid off more slowly. Once you relieve yourself of your burdensome debt, you can explore the best way to invest this capital. And the next consideration worth mentioning is do not try to time the market. Since the market is around all-time highs as of this recording, some investors may consider the idea of waiting for the bottom of the next bear market to invest their money. On the surface, waiting for the stocks to drop by 20% in order to buy things on the cheap seems like a great idea. In practice, this strategy is impossible. There's no way to perfectly time the market. Even if the market did fortuitously free fall just before you had a large pool of capital to invest, most people would still hesitate to start investing. Their psyche would tell them that the market can always fall further. Furthermore, markets tend to rise 3 out of every 4 years. Even though the market is currently at a high, it has a probability of continuing to rise going forward, so there's no need to be concerned about investing at a market high. And another point is the fact that diversification is a must. Choosing to have exposure to a variety of investments is always imperative. While the US market has been setting record highs, it also has experienced large periods of underperformance. Additionally, while most global markets have not had such a good run over the past decade, they have outperformed the US this year. The same is true for various asset classes and sectors whose performance moves in cycles. Maintaining a diversified strategy when deploying capital can minimize volatility, risk, and offer a higher probability of achieving your financial goals. Investors should always pursue a strategy of diversification across geographies and asset classes. In my next video, I'll offer 3 more considerations to manage a windfall. And with that, I hope you found this practical planning tip helpful. Until next time, stay prudent, practical, and don't forget to plan ahead.